Good evening, good morning, and welcome to Tech Mahindra Qtr3 FY21 results. Thank you all for joining us today on a Friday evening in India. Some of us had met a few months ago, and during the Investor Day, me and my management team had presented to you the Tech Mahindra strategy and how it is branded as Next.Now. We had also discussed with you the extraordinary investment your company is making in cloud, AI, cybersecurity, and in data and analytics. The results are here, where we are seeing a lot more revenue coming in from accelerated digitization of the marketplace and customer interaction, increased migration of assets to the cloud, and operations now being run not only for work from home, but it has become work from anywhere. We believe many of these shifts will become part of the new normal, and we as a company have evolved our business model where we have looked at human-centered experiences for the customers. We have looked at how customers will engage with our customers and how we can integrate our portfolio and offerings and be able to synergize with our customers and the customers' customers. Last 10 months, we set up 4 offices directly working with me. The transformation office led by Simi Lamida, which is focused mainly on delivery and operations transformation. I have growth office, which is a growth task force, looking at new markets, looking at revitalizing the alliances, large deal teams, and more importantly, looking at new capability and service offerings. The third office is looking at process transformation, where we are looking at company-wide in streamlining processes, and obviously all the 4 teams work together with each other. So the process transformation has clearly looked at, again, the new normal, the command and control centers, the AI-enabled tools, which are required to work in an environment where all our employees can work from anywhere. The 4th office is obviously on the people side. On the people side, we do believe that there is a complete, reboot of not only their skills, but also to take into account that many of our associates may choose to work from either the home or the beach, but the reality is the beach is probably away till July or August, and right now they're working from home, and they may have some unique challenges. So the cultural transformation, people transformation, business transformation, or the growth office and the operating matrix transformation all are working together. But I do want to compliment the team for delivering what I call integrated view, 360-degree view of the way we are engaging with our clients, our employees, and more importantly, building the future together. The results are here. The future, I think, is a lot better. The result on one end is 1309 million, up by 2.8% in constant currency. We have seen an all-round growth, and particularly Europe and Comms Group, Network Services Group, and Manufacturing have been the flag bearers for this quarter. Delivery and operational excellence has resulted in what I think 19.6% EBITDA, which is a 24-quarter high for Tech Mahindra. Our cash flow generated is close to 800 million of the cash we have generated this year. The Q3 cash flow is 226 million, and it is again showing very healthy signs. On the deal pipeline, I think it is one of the best deal pipelines I have seen in Tech Mahindra. $455 million of net new deals, and it is only going to become better. So net new deal signing this quarter is good, but it will become better. Our 5G continues to scale up. In the previous call, Manish Vyas had explained to all of us that it is really three vectors: the 5G ecosystem, the 5G in enterprise, and 5G in network. I'm sure there will be more questions on this, but I'm pleased to announce that one of the deals that we signed this quarter is from network services, 5G rollout in one of the European customers. So overall, what I would call a 360-degree collaboration, a 360-degree communication, a 360-degree people connectivity has resulted in a lot of what I believe is a stronger company for future. As a company, we are also very, very conscious on individual social responsibility. Our employees continue to lead and demonstrate how they work extra hours over the weekend, and sometimes it is really heart-rending that employees would really spend not only their time, money, but they also would pool in a lot of their friends together to create a wave of social responsibility. Community services continues to be a very strong forte. And the third plank of our sustainability initiative, our environmental and social goals, I think we are continuing to be the best in the industry, top 100 in the whole world, and almost top 10, 20 in most of the initiatives across India. We have featured in CDP A-List 2020 for both climate change and water management. Your company has also emerged as a leader in Dow Jones Sustainability World Index for the 6th consecutive year. So while in 2020, there is many reasons to say why it could have been a different year, but I can only say is Tech Mahindra team has rallied together. They've become more customer-centric, they've become more digital than ever, and more data-driven and more disciplined than ever. So we continue to believe that all the awards that we're winning in various forums on our people management and overall the way we have all rallied together to go and what we have called as a repair phase, I think we are now confident that we will enter as of 1st April in the rally phase, and these are the three phases that we have described to you. Number one was repair, because as I said, all of us, all collaborating to deliver value to customers in this crisis. Number two, on the rally phase, I think many of our investments in R&D, in new products, in platforms, and in new service offerings is going to give us better results. And during the right phase, we are hoping that we will have a lot of breakout groups. I want to particularly highlight that when I spoke to you after the Q1 performance, many of us were a little uncertain on how BPS will rally during the repair themselves during the period when the pandemic hit us, because many governments did not give the permission. Many of our employees did not have a desk or a computer to work from. many of our employees actually have to go through a social situation where their landlords would not even allow them to operate from their houses. And today, DPS is leading in terms of my growth because they've grown the business 11.4% quarter-on-quarter. I do want to compliment Ritesh for his leadership.
That some of the measures which we have started, including what I would like to think about as portfolio synergies, they will continue to play out very, very well in the coming quarters. In terms of some of the other areas, free cash flow, I think we had a stellar quarter again. We converted about 127% of PAT into free cash flow. I think the capex was low and DSO reduced by about 2 days. So I think from our perspective, this continued focus and I think the support of our customers has helped us achieve a reduction in 3 quarters of almost 17 days in DSO, which I think is something which we hope to see if we can sustain as we go forward in terms of maintaining those DSO levels. I think the hedge book continues to be at about 2.16 billion. In that same range, we follow a consistent hedge policy, and that's served us very well over a long period of time. I know there might be a lot of questions, so I'll throw it open for questions. Back to you, please, operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from your question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
So, ladies and gentlemen, just want to quickly introduce you that besides CFO Manoj Bhatt, I have our newly appointed head of business finance who has worked for 18 years with GE, and he is going to look after our portfolios where all the 1,000 accounts, contract administration, and the business finance Rohit Anand on the call. I also have the head of my process transformation office, Neeraj Jain, who used to be the CFO of Comviva, joining me. Other than that, we have very familiar faces, Ritesh Kidnani, Jagdish Mitra, Sunny, Dhamija, who looks after the transformation office, and Harsh, who is our global head of HR, and we have Manish Yas, whom you all know very intimately. So I do have my leadership team on the call. I'm not sure if Ravi is going to call. Ravi is our President and Chief Operating Officer.
Yeah, I should be. I'm here.
And Vivek Agarwal, our President for Corporate Development, very rare quarter where he will not make an announcement today. He only made an announcement a few weeks ago when he acquired that Hong Kong-based small company.
Thank you.
Over to you for the questions, please. And Manoj, please direct the questions, the ones that you are not answering.
Thank you very much. The first question is from the line of Sandeep Shah from Qtr3 Securities. Please go ahead.
Yeah, thanks for the opportunity. Just wanted to understand, if you look at our utilization looks at all-time high, and on the employee side, both on the BPO and on the IT services, we are seeing a decline on a Q1Q basis, while the industry is indicating that supply side constraint may increase and the attrition may inch up and people are going beyond just-in-time recruitment by creating a slightly higher bench. So is this lower visibility for us in the coming quarter, or we believe that the utilization has a further room for upside and that may translate into further positive surprise in the margin? So just wanted to understand this as a whole.
So Sandeep, thanks. So I think the way to look at it is 2-3 things. First, let me comment on the headcount decline. So if you look at the headcount decline in BPS, it was largely because the retail ramp kind of ended towards the end of December. So that's a point-to-point thing. So I don't think you should view it like that. Coming to the broader question, I think from our perspective, we are now going to be operating in a mode. 87% is the all-time high utilization. I think we will see it come back to more manageable levels in terms of utilization. The way to look at it is that we will see headcount growth going forward. But obviously, there is also a counter of automation and some of the savings coming through. Our plan now is to our campus program, recruitment program has already started recruiting in this quarter, and over the next 2 quarters we expect about 5,000 people to join. So I think on all fronts we are adding capability and talent. So from my perspective, I think it is about running the operations in a very optimized manner. But as we go forward, I think you should see the utilization ease off from the 87%. From a second perspective, which you said about growth, I don't think growth is the issue here. I think we will see growth going into Q4 and Q1. And as I mentioned before, I think if I look at funnel conversions, I do believe that Q4 will be better than Q3 in terms of conversions also. So I don't think it's a reflection on that. I think it's a question of a period of adjustment back to a different kind of utilization level, which will normalize over the next quarter or two.
Okay. And the second question is on communication. Some of your large peers in India have started talking about turning around of growth prospects in the telecom, A, in terms of pipeline, and B, in terms of conversion of pipeline into deal wins. So do you believe, because we being one of the largest vendor on the telecom, we believe that the growth visibility is becoming much more stronger and it may start turning around sooner than later as a whole?
I'll request Manish, he's on the call, to answer that question. As you know, it was a very strong quarter for comms for us. But Manish, over to you.
So thank you, Manoj. Thank you, Sandeep. Yeah, you're right. We are indeed looking at some strong deal wins. There were a couple of postponements only for an interim period. But we do expect the pipeline is, I think I've been saying it has been robust and continue to grow across the board, from network to digital to BPS. And we do anticipate, some of these deals maturing in the next few weeks, few months, if not the next quarter. We should make progress.
Okay. Thanks. And I will come in the follow-up.
Thank you. The next question is from the line of Pankaj Kapoor from CLSA. Please go ahead.
Yeah, hi. 2 questions. Manoj, first one to you on the headcount. Any plans for the wage hike? And if you are looking at utilization going down in the coming quarters with the hiring coming in and with the potential wage hikes also being planned, then what kind of outlook you have from a margin perspective? So that's first question. And the second question to Manish, in terms of the 5G deals that CP alluded to, can you give some color of the size of that transaction, and do you have similar kind of deals in pipeline? Are these 5G deals more smaller in nature? Because if I look at your TCV of wins in telecom, that doesn't seem to be very inspiring. Thank you.
So, Pankaj, let me pick that question first. I think in terms of salary hikes and variable pay, I think entering Q4, I think we should start normalizing on both of them. Our plan is currently to give a staggered hike over a period of a couple of quarters or more across the employee base. So to me, the way we are looking at it, and as you know, our current EBIT is about 15.7. There might be some pulls and pressures in a quarter, but I do believe we have sufficient levers to cover some of these over a longer period of time. So I think, and as I mentioned, those levers, I think they will be around portfolio companies synergies, how to make work more effectively, how to drive further changes in delivery model, whether it is through offshoring or through automation. I think some of those levers will help us offset some of these pressures, maybe not fully, but at least partially. And then there is the thing which I alluded to in the beginning in terms of the operating leverage from growth coming back, and then that should also help in terms of the overall margin recovery, because some of our costs will not come back almost permanently is what I feel. But that's the way we are thinking through it. Definitely there will be increase in some of these costs which you mentioned. I'll hand the second question over to Manish on the 5G deal and color on that.
Sure. Absolutely, Manoj. Pankaj, I'm going to probably share 3 good news with you today. I know you all have been asking these questions for a while. Number one, we've always said, and I think CP again alluded to the point that when we look at 5G, not only do we look at the ecosystem, the enterprises and the service provider networks, but within the service provider networks, we also look at 5G not just from a network standpoint, but also from the overall digital outlay that needs to be transformed, modernized for 5G. So that continues to remain a strategy. Point one, it's not new. It is just a reiteration of thoughts on what our strategy has been and will continue to be. Regarding that deal, it's a relatively larger deal. It's a bit north of 50 million type in size. It's a turnkey responsibility that the service provider has given us to execute and realize this component of this large area layer of their network on an end-to-end comprehensive responsibility basis. Number two, as part of our overall network business, our 5G component continues to increase both in terms of funnel as well as in terms of the percentage of revenue as part of the overall network business. Because if you may recall, we have always said that we will continue to transform our network portfolio as we continue to grow. We will always look to pick our bets very carefully to increase the software component in the network and to dilute things which are probably dilutive from a margin standpoint. So that's, so I think we are at more than a double digit of our network business, slightly more than the double digit number in terms of our 5G component of our business. On the pipeline side, it is even more. And that I think is a bit of a trend for you. And the third thing I would like to share with you is that while we have seen a robust growth in the overall comms revenue this quarter, it is largely also powered by the network business. It's probably, I know we don't break it down, but it's a pretty healthy and probably one of the best quarters we have had in the network business, largely powered by the work we do in OSS orchestration and the 5G related projects. So I hope that gives you a little bit of a color on how we are trending vis-a-vis 5G overall as a business.
Manish, you want to add, or Jagdish, you want to add that we have started seeing an uptake for 5G in enterprise also?
Jagdish, you want to take it?
Yeah, sure. Hi, this is Jagdish. So a couple of areas that we've started seeing significant growth within as we start to focus on 5G for enterprise. As we said, there are 3 vectors. And this by no means are huge deals, but these are extremely encouraging work that we're seeing. At least about 8 pilots we are doing today across process industries, across ports, across oil refinery, across retail, and aerospace and defense. And this is a combination of Europe, Middle East and Africa, and some North America. And these are pretty large brand names that we're working with, and there are about 2 of them are go-to-market engagements with telcos, where we are taking our relationship with the telco out to a few enterprises on the 5G for enterprise with our application service portfolio. And as some of you might have followed on social media, we are running, actually finished yesterday, ran our largest, one of the largest virtual events on 5G topic across the last 2 days. And it was very well attended and very well represented. So we feel bullish about the enterprise segment as well.
Manish, if I can just clarify, from the pipeline perspective on these around 5G, are they of similar size like 50-odd million, the one which you referred to?
Yeah, sorry, I missed that, Pankaj. I'm sorry.
Yeah.
No, I got that question. Yeah, no, you're right. So I think there are both type of deals. There are, of course, still smaller size deals which are built around looking to do very point solutions in 5G. That will continue for some more time. But yes, there are few deals which are in the very similar pattern that I described, and there are a couple of them which are actually a little bigger, that are not exactly about rolling out 5G, but they are about creating the platform so that the next phase of investment can happen over the next 3 to 5 years within that telco. So it's a mixed bag, really.
Understood. Thank you, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Sandeep Agarwal from Edelweiss. Please go ahead.
Hi, good evening, and thanks for the opportunity. City wish you and your team a very happy new year and congrats on excellent execution. So I have a couple of questions. First, a little on the strategic side. So we saw Europe doing extremely well. What part of that to assign to filling up of some of the gaps which we have been making an effort to in last few quarters? You think the result is because of that, or you think it is more traction on the geographic front? And secondly, is there some gaps which we believe there are in the US geography as well, and which you are trying to fill now and will show results in coming quarters? So that is first part of my question on the strategic side. And a second question will be more on the growth and margin both together. So we are now, as one of the earlier participants asked the question, that we are seeing some kind of green shoots on the communication side. And if you also see all the commentaries around 5G, it looks like the ecosystem is coming together very strongly. So if that is going to fire, and that has not fired for quite some time, the comms have been weak for us for quite some time, and if that starts firing, obviously, Manoj, does it provide you a much bigger leverage to to have a flexibility on the margin front? The reason I'm asking this question is that we have probably started running very optimum utilization or optimum capacity utilization right now. And I hear your point that you have started hiring and all, but that may take some time before it comes and adds the workforce. So what is your sense on that front? Will it hit our execution in the near term, or you think our subcontractor cost will be elevated for that timing till we fill that gap? That's all from my side.
So Sandeep, the point is that as I mentioned earlier, I think as growth comes back, I think as I said, a quarter or two of adjustment might be there because we are coming off a model of extremely high utilization. So I think that's something which is going to happen over the next 2 quarters, and it will normalize back to probably the more usual levels of 84, 85. That's the zone we are in. The second thing, I mean, since you mentioned subcontractors, what's also happened is, if you see, the subcontractor costs have also gone down. So they might go up and down here or there because we look at it, both of them as fungible together. So from a question, did I answer the question? Because you said something about a strategic aspect also. Do you want me to clarify further and ask some of my colleagues to add in also?
No, I am done on the utilization and the recruitment side, which you already answered. But I have one question on the strategy side, which I was expecting an answer on. The filling up of some position is basically the Europe growth. It is more to do with filling up of the gaps which we have been doing for last few quarters, or you think it is more of a geographic phenomena and vertical phenomena?
Manoj, let me take this.
Yeah.
So Sandeep, 2 or 3 ways to look at it. As I told you in my opening commentary, I have an extraordinary focus on wave 2, which is really cloud data economy, not just data management, which includes data monetization, cyber security, and also on AI. So that is one, whether you call it a horizontal, because ultimately it all folds into every vertical. The second is from a geographic focus. I mean, Europe had a few bad quarters, and they are now shown recovery. And I do believe that the company is, as a strategy, will continue to look for, areas where we need to fill extra focus or an extra talent addition. So, for example, while aerospace and automotive is right now not doing too well, but I actually want to be prepared, and I'm going to actually augment my capacity to create what I call the EV market. Now, the reason I'm bringing this up is because, we have already invested a lot in creating a sub-vertical for EV, and that, I think, will be the growth market for us. So continuously we will be finding niches and will continuously invest. For example, Manish Vyas is now investing a lot in the capabilities to build the media and entertainment business. Now, it's a small business for us today, but the investments are obviously disproportionate to the size of the business. I can go on practically every vertical or in certain markets. I mean, we are going to double up our investments. So I think it is a continuous process, Sandeep. And on a strategy side, I promise you, we look at which areas to divest and which areas to invest.
Okay, Sippy, thanks for that clarification. And also, if Manish can answer the comms part of the question, it will be great.
Sandeep, like I said earlier, I think as far as the strategy as well as the growth patterns in the comms vertical is concerned, it is going to continue to evolve around the 4 or 5 things that we have seen increased traction in. So for example, we are very clear that the digitization of the telco is a huge priority by the industry. There, of course, this is not an industry that is seeing the same level of growth as an industry as some of the other industries are at this point. And there is a very clear pattern around because of how the traffic has shifted and what their products and services are. But that said, because of 5G, because of the opportunities around the new set of wireless and the new set of industrial use cases, there is no alternative but the industry will surely but gradually continue to digitize and modernize. And hence the traction we are seeing right now are around what we call as the digital telco. I mean, we spend enough airtime on discussing 5G, so I don't think I need to elaborate on that. The third aspect, of course, is the whole concept of transformation of their customer experience. And as you know, we have probably one of the best portfolio in that space, starting from BPS all the way to the content, commerce and creative, with what we have added in BORN and in between the whole transformation that this company has done for several years around CRM and the customer subscriber management system. So that's the third piece of our growth. I think the fourth and the fifth, which are really becoming very exciting, these are still early days for the industry. This industry has not been the first to adopt, are things like cloud. But as you know, we are probably one of the largest in this industry with some engagement that propel us with the capabilities that we have. So broadly speaking, we have our bets well defined. We have also defined what are the things which we will not do. And I think over the next 1 year, you'll probably see manifestation of each of these initiatives translating into the transactions that we will do. I'm hoping starting next quarter onward, you'll start giving you a little bit more commentary and color around it.
Thanks a lot and best of luck for the current quarter.
Thank you.
Thank you. The next question is from the line of Mukul Garg from Motilal Oswal. Please go ahead.
Yeah, thanks. I had two questions, for Ritesh and Manoj. Ritesh, if you look at the performance of PPS, that clearly has been outstanding over last 2 quarters. How should we expect this business perform going forward? Because I believe Manoj mentioned in his initial comments that there was a ramp up of a retail business which ended in December. So should we expect BPS to stabilize around these levels in the near term before scaling up a little bit later in FY22? Or do you have enough momentum going on that the growth in BPS will continue to remain quite robust? Also, if you can just comment a bit on the strong profitability you have been generating in the BPS business this quarter. It was around 24%, which clearly is quite high. Manoj, on the wage hike side, just want to clarify. You mentioned that the wage hike cycle will be spread over a few quarters. So should we consider that this will not have a major impact in Q4, given that this will be a spread event, and hence things will be more stable?
Ritesh, you want to go first?
Yeah. Thanks for your question. Let me just respond to the points that you raised. BPS had a very strong quarter. We grew 11.4% quarter-on-quarter as CP alluded to right at the beginning, and close to 20% quarter-on-quarter on the EBITDA side, to almost a 24% EBITDA business, which is fairly high to the peak that we've seen in the business. We also crossed a very significant milestone in this quarter where we doubled our quarterly revenue in 15 quarters. To the question you posed in terms of the robustness of the business, so seasonally Q3 tends to be strong for us because of the retail spike that we end up getting. But we also see some opportunities in Q4. We are sitting at our best ever pipeline as a business, and at the same time, we also see an opportunity to convert some of the deals that are imminent to give us a tailwind going into FY22 as well. So overall, we feel extremely positive in terms of the outlook of the business going into FY22, and we think that there is an opportunity to continue to take market share away on the back of the value proposition that we've been saying consistently now for the last several quarters. Cannibalize our existing business through hyper automation driven by AI analytics and platforms, and number 2, deliver to outcomes. We think the post-pandemic world allows us to continue to consolidate on that proposition and deliver superior experiences to our customers. So we feel very, very good with that. The second question that you had was related to the profitability side. And while I think obviously we get a little bit of a tailwind there with the fact that a substantial part of the workforce is working from anywhere, and Manoj talked a little bit about salaries and things like that and travel that which are all contributing factors. We do believe that there is an opportunity out here as we continue to transform our customers' operations to get some benefits there in terms of how we run our business itself. So we think that those opportunities continue to exist as we continue to transform our operations, because that's the promise of the business as well. And that should allow us to operate in a range from a profitability standpoint while continuing to make investments for the future. Manoj, over to you.
So Mukul, I don't want to get into what happens in next quarter and so on and so forth, but I think what I mentioned was also that there will be pulls and pressures in terms of some of these costs coming back, but I do believe we have sufficient levers to try to mitigate some or all of it. So I'll just leave it at that rather than get into specifics of salary hike, which quarter, what impact.
Fair enough. Manoj, if I can just follow up on that, because this quarter clearly you guys have delivered a very, very commendable margins. Should we expect to see probably a more than normal impact on margins in Q4, given that you are heading into not just one or two but quite a few opposite direction lever? You will have employee additions which will be coming in. You will have utilization which will be moderating. You will have attrition which probably will be spiking a bit from current levels. which are multi-year high. And then, at the same time, you are talking about variable pay and wage hike. So, is that something which will materially hit Q4, or you are reasonably confident that there is enough operational efficiency, out there which you can tap into?
So I think from my perspective, if I look at it, that we definitely will sustain margins is what I feel. If you're looking at just one quarter kind of view. And second quarter, Q1, obviously there are some revenue, we have the seasonality coming in, Comviva, etc. That's a different story. But if your question is restricted, I think there's a large amount of confidence that we will sustain despite some of the pulls and pressures you talked about.
Fair enough. Thanks for taking my question. I'll get back into the queue.
Thank you.
Thank you. The next question is from the line of Rishit from Nomura. Please go ahead.
Hi, thanks for taking my question. Just two questions from my side. First, on the pipeline, right? Some of the peers have seen better participation in the larger transformation deals, right? And it's been a while that we've announced some of the larger ones. Does the pipeline have some of these larger deals, or it's largely in the mid-size that we're sort of focused on? That's one. And second, just on the transformation offices, how should we think about 4 of these offices? What are the key focus area or any KPIs that we could sort of share that we're looking we're sort of looking to execute over the next, let's say, 3 to 4 quarters? Thank you.
So let me take Rishi, the transformation office part. I mean, as the name says, all 4 of them are program offices where they are providing data analytics and tools which allows my line managers to take decisions. Some of them have a direct central impact. For example, a process transformation office. Process transformation office is clearly looking at process improvement and being able to come up with models which are more predictive and more analytical. And it is always the basic processes that you tend to take for granted. One of the processes my team is working on, which is Neeraj and his team are working on, is forecasting to fulfillment. Now, it's not a standalone process. They will have to work with Simi's team on operating matrix. They will have to work with the sales operations teams. They will have to work with the what is called our
Hello, sir. Can you hear us?
Any duplication of processes. Similarly,
sir, sorry to interrupt you. We lost you in between.
Rishi, can you hear me?
Yes, you're audible now.
Yes, I just explained the process transformation office. Similarly, operations, future of delivery, which is what Simi looks at, is clearly the name says it is all the 25 things which are on the operating matrix. It could be revenue per account, it could be revenue per employee, it could be a yield from a particular office, and she's got about a team of about 40 data scientists which works with her and which give feedback to the IBUs, which is our business units, on how they can improve their performance. No business transformation happens without the people transformation, and that is where the team on the people transformation is continuously looking at A, the culture, B is the way we all are able to communicate and be able to look at our execution and collaboration. So that is what the people transformation office is looking at. Growth office, I don't have to say, but they have really 2 big vectors. One is on customer and account relationship expansion, and number 2 is mainly around the large deal teams. So those are the 4 offices, but they are enabling offices. They enable the teams on the ground.
Perfect. And then just on the large deal piece, how's the pipeline looking broadly?
Manoj, you're taking this?
No, Jagdish, if you can comment on the pipeline and how we are seeing ourselves positioned on this.
Sure. So on the overall enterprise pipeline, I think as Ritesh also talked about his BPS pipeline, I think we have one of our best pipelines in enterprise over the last 6 quarters. On large deal itself, also the pipeline is amongst the best. Our definition of large deals, as you know, is $50 million deals upwards. And that deal discussion-wise, we are approximately about $4.5 billion upwards of pipeline on the enterprise side. So bullish about the pipeline development, bullish about the large deal improvement as CP talked about. That's one of our key vectors as we start to look at the transformation.
Thank you.
Thank you. The next question is from the line of Sudhir from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. CP, my first question is related to your earlier remarks about...
May I request you to speak a little louder, please?
Yeah, is this better?
Yes, sir.
Yeah, CP, my first question is related to your earlier remarks about accelerated digitalization driving strong growth for us. But if you look at your segmental growth rates, right, most of the segments which reported strong growth, be it communications, manufacturing or Europe, essentially these are the segments which had gone through a sharp revenue decline in June, followed by subdued trends in September. So it is the same rebound that most of the economies or sectors, even outside technology, are also reporting, aided by, let's say, a mathematically favorable base. So what gives us the confidence that it's actually being driven by a secular trend of accelerated digitalization rather than a mere base effect?
Manoj, you want to take that?
Yeah. I think CP is probably unreachable. So I think the two or three points here, right, which I wanted to clarify. So one is what went out and what is coming in are two different trends. It's not the secular trend you're talking about, right? So when we see spend coming back, it is coming back in the form of digital and something in the form of innovation, right? So that's the first point. The second point, I think if you really see, I think across sectors and while Europe and manufacturing, I did highlight when I spoke that it is also something we had anticipated will come back. That's happening. Similarly, and this is true for across sectors, what we are seeing is there are two trends playing out, and let me clarify those two trends. So one is that there is going to be digital transformation, which is one layer of spend. But the other layer of spend or spend optimization is the larger outsourcing kind of deals where people are clubbing transformation as well as run function into one. So you lift, shift and transform if you want to call it that. But that's the other type of deal. And I think we are seeing both of those play out. So I don't think we can separate out digital transformation from almost any engagement today, including almost all of our deal pursuits. I think there is an element of that. And that is probably why you saw that statement and you're quoting that. Because we truly believe that's how it is. Now, this quarter, if I look at some of the areas where we are seeing growth, I think even Ritesh alluded to it. Even in BPS, we are looking at hyper automation and how do we drive those benefits in our existing processes. So I don't know whether we should take a narrow definition here, but if we take a broader definition, I think that trend stands true, and I think as we have mentioned, I think there will be an acceleration in deal wins as we go forward is what we believe.
Yeah, thanks, Manoj. And second thing is on the people front. So if you look at even before COVID, over the previous 3-4 years, to include, this would probably be the second time that salary hikes may be getting kind of split in a single fiscal. We have seen multiple rounds of, let's say, headcount rationalization, including even in the past couple of quarters. So from a sustainability and employee morale standpoint, how are the things, and how is employee morale essentially being taken care of in this backdrop?
I'll request Harsh to add in, but I think from our perspective, I think there are probably more at a generic level. I think you are right that there was a skipping of the salary hike cycle. I think, but you must remember we adopted a strategy which was very different in terms of there were no variable pay cuts for below a certain level at all, right? And then it was graded across, and I don't think we implemented any such thing. So I think we have adopted a slightly different stance, but I'll let Harsh articulate how we are thinking about employee motivation in these times and what are the measures we're taking. Harsh, over to you.
Yeah, thanks, Manoj, and thank you for asking the question. So like Manoj said, even if we took, the hit, I think it was more the leadership team that, showed by example or led by example, because we did not touch the majority of our employees and associates who were at the bottom of the pyramid. Now, as you know that there has been a lot of effort that the organization has put in for not only employees, their engagement and safety, whether it is, and this was important because, this was one of the key fears that most associates had, how to keep safe. And, whether it's coming up with our mHealthy platform, which was the foremost diagnostic tool, which we actually not only used for our associates, but also our third-party employees, but also, the whole 360-degree wellness program, including a huge amount of, emphasis on our mental fitness or mental health, including a 24/7, counseling sessions, which were available. I think the organization invested a lot to keep people engaged. So our Josh teams, our location council teams were very active. And as you see, the results show it. Our attrition is actually at the lowest in many quarters, at about 12%. So obviously, despite the fact that people were going through a tough time, I think that the organization responded to keep not only the employees engaged, the employees happy, but also we reached out to families and extended families and took care of them. And I think that probably was one of the reasons why the our associates around the globe actually responded so well to take care of our customers. And you can see the result shows that each one contributed to make this happen.
Sure, sir. That's it from my side. Thanks and all the best.
Thank you. That will be the last question for today. I will now hand the conference over to Mr. Manoj Bhat for closing comments.
Thank you everyone for attending our call. I know that there might be some people whose questions were not answered, so if you can get in touch with the IR team, we'll make sure that we get some of your questions answered. Thank you all for joining once again. Thank you.